Well, the share market rose by an even 1%, and it's a bit hard to know whether that was sparked by the free trade agreement with China that was signed today, or continuing excitement over the appearance of Warren Buffett down under, buying 3.7% of IAG yesterday. Perhaps a bit of both. Plus some bargain hunting, since banks and energy stocks have been getting beaten up lately, and for many investors were looking cheap. Woolworth's share price wasn't helped by the announcement that 1,200 plus one would be leaving the company, including CEO Grant O'Brien. Now, here's a graph of the share prices of Woolworths and the owner of Coles, Wesfarmers, over the past 12 months. One flat, one down, 25%. Enough said, I think. On the subject of the China Free Trade Agreement, and without suggesting it's not a good idea, it must be said that things have been going quite well without it. This is a graph of Australia's export markets since 1885, when 80% went to England. 10 years ago, China took 11% of our exports, now it's 32%, and China is by far our largest trading partner. Of course, need is the best incentive for trade, and price comes second, and that's been helped by the Australian dollar depreciating 25% against the Chinese yuan in the past 3 years, making our products, mainly iron ore, that much cheaper. The FTA, though, will bring agriculture and services into the sales tent with the iron ore. The Chinese share market also went up today, but not because of the FTA with Australia. On their side, the deal allows more investment in Australia, and if anything, that'll be a negative for their market. And Greek shares dropped another 4.8% as D-Day for default draws closer. And finally, the Australian dollar eased slightly against most other currencies, but continued to surge against the flightless Kiwi. And that's finance.